Good afternoon. This is Dr. Ken Long from Tortoise Capital Management with a case study in the regression line fractal framework on symbol XIV, which is the inverse daily VIX ETF. And this is from June 17th, 2014, thus rlff regression line fractal framework. June 17th, 2014 on XIV. So here we have the blue line is the start of the day. Word on the display, we're using the pink line is the 270 regression line, moving regression line. This gray ribbon looking area we're treating as a noise area. That's a 30-period Bollinger Band plus or minus 1 standard deviation on the 270. So that's this indicator here, Bollinger Band 31. That's a Bollinger Band on the regression, on the moving regression line. The green line is a moving 90. The black line is a moving 30 regression line, and the blue line is the moving 10. So we're looking at 4 regression lines, the moving regression lines, the 10, the 30, the 90, and the 270. And price, we are arraying as a 2-period Bollinger Band. That's this orange ribbon looking thing. And then the price line itself is the actual black line that gives it this pleasing 3-dimensional effect. Looks like a price ribbon. So we're looking at 1-minute charts on this one. And about 20 minutes or 15 minutes into the session, so we had to open, and then it frogged around a while here, found this swing low at the same place it found a low yesterday. Maybe a little hard to see, but then it finds support inside that gray noise area around the 270, then starts taking off. That looks like a morning hook to me. The impulse is upward, as you can see by the 270. It held support a second time inside that noise area, so I'm willing to buy this one at 40.85 with a 20-cent stop down here at 65. It moves out smartly in our direction, makes a couple nice moves. We get a second RLCO over here. I'm using the 90-period regression line, the moving regression line, as my signal to exit, so it keeps me in here in these difficult areas. If this had gotten me out, then a resumption or making a new high of the day and an upward move would have gotten me back in either here or here. But in this case, I'm using the 90 as the trailing stop. So we just stay in that trade, and then the signal is confirmed here at 41.30 at about 10:20. So that's about 35 minutes. And what I just want you to notice, this, by the time this signal has fired, we've had a high, a lower high, and then failing. That's enough price action to give the 30 an opportunity to roll over. I call that the 12 o'clock position on a clock face when the 30 starts rolling over, in the same way that this is a 12 o'clock position on the 10. Now, for those of you keeping score at home, you also know that when the RL10 gets to an extreme move above the RL270, then that can actually be played as a reversion to the mean. I didn't. I was waiting to stalk it, but playing a reversion from here, the target is back to the 270. You can see how, like clockwork, it comes back to the 270. I'm still have a long side bias on this one because of the upward slope of that 270. So we didn't take that trade, but that is certainly part of the framework. The second trade was after it finds support down here at the 270 and the Bollinger Band mean, this noisy area. It crosses back over the 270. That's when I like it. So we get a second entry in here. This is at about 41. Looks like 41.10-ish. And then we get a quick move back to the 90, rolls over. I like this exit here. That's about 1R. That's a 20-cent move. Pulls back to the 270 again, finds support north of the gray shaded noise area. takes off again, so we're back in here. Now when it makes a new high, respect the new high of the day, particularly in this kind of an uptrend, and with money in hand. There's a little over 3R in hand already. We get a second entry here, a third entry here when it fails to fail, and now by this time I've got 3 bullets in. I move my trailing stop up from the south side of the river, this noise area, and move it up to the upside. Then as it makes this little cresting move here right around lunch, I go ahead and make my trailing stop now is going to be the 270. So I just draw this extension in here, and it happens that shortly thereafter the exit hits, and that was that last little surge up when I adjusted the stop up into here, and then it pulls back, and I get out of everything at 42.05, and then those 3 bullets contribute 6.8 R to the cause. There's nothing much left the rest of the day, and you can see how the 270 gets to the 12 o'clock position. When it starts going flat, notice how you know you're in a sideways channel when that noise channel disappears. So that Bollinger Band collapses back onto the 270, and that's really an indication that you're in a sideways quiet market, and that this run is done. So when the 270 is above that noise channel, that's sort of the upward bias, and then when that noise channel disappears, that's enough information to say you're sideways. So those were the only trades that I took today, because we were working with the British Army on joint planning operations between the Brits and the U.S. So I only had a limited attention span today, and so XIV is like my preferred trading target in that kind of environment. I just look at one thing. So that's the regression line fractal framework, using those 4 moving regression lines, the 10, the 30, the 90, and the 270, and then using the price ribbon to try to reduce the amount of information about price. I don't want to overthink this by looking at candles and trying to fine-tune it even further. And then I'm really liking the way this Bollinger Band on the 270 gives us a region of noise to protect us against sharp moves. So that's today's experiment. That comes in right around, well, right at 10R for the day. So not too bad day at work. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.